All right, so today is Wednesday, the 6th of May, 2026. Let's see who is on board. Good afternoon, Amos, Fahad Sanusi, Freeman Foundation, Mama Debanjo, Mama Debanjo's funeral, Nathan Martins, Sadiq Otaru. Welcome everybody on board. Ikechukwu Stanley. You're welcome on board this afternoon. I want to believe you can all hear me loud and clear. If I'm not too clear, just type. Let me just type that. I hope you can all hear me loud and clear. Okay, somebody saying you can't see me at all. Stanley, I think my camera is on. Cannot see you at all. Is that true? Can any other person see me aside Stanley? If you can see me, please type it in the comment section. Can you all see me? Thank you, Mr. Freeman. Mr. Freeman is seeing me. Thank you. Thank you for that feedback. So, Stanley, you need to check your device. All right, Mama Deva just funeral too can see me. All right, let's not waste time. Others will join us along the way. So this afternoon, we're looking at a very important topic. MetaTrader asks every trader needs to know. Now, MetaTrader is that platform we use in trading the Forex market. Not only Forex, stocks, cryptos, indices, all the sub-markets under what we call the global financial market. Now, I'll briefly show you how to download this software to your laptop because this is the desktop version. That's what I'm using for this webinar this afternoon. All right, to those who are just joining us, welcome on board. So for you to download this trading software, the software is actually designed by a company called MetaQuotes, and we at PU Prime use it. Generally, it's a trading platform used by many traders around the world. To download this on your desktop, come to this section, trading. You can see me highlight trading. This is our website, puprime.com. Then under trading, you scroll down to trading platforms. You can see all the trading platforms we have. We have the PU Prime app, PU Prime Copy Trading, PU Prime Web Trader, MetaTrader 5, MetaTrader 4, and PU Social. Now, you can either use MetaTrader 4 or 5. The choice is yours. But mostly for beginners, we always encourage you to start with MetaTrader 4 because it's a lot simpler. MetaTrader 5 is good, but it's the advanced version. So the choice is yours. But if I were to advise you, I would say start with MetaTrader 4. Then with time you can graduate to MetaTrader 5. MetaTrader 4 is just basic and very foundational, user-friendly, especially for beginners. So just click on download, then you can do the download. And once you're done with the download, you'll see the interface open. And you have something. Okay, I'm not there yet. All right. So you have something, a chart that looks like this. Though in the real sense, when you open your chart, it may not look exactly like this initially. This is a formatted version. So let me show you the actual version that will be displayed once you do the download of this MetaTrader. Once you download it, what you will see initially will look something like, it's going to look like this. This is what it's going to look like. But normally we do format it to have that white and a black, that white background, which is more visually appealing. Now, the essence of this class is just to show you how to navigate around the software because basically as a trader, you can't escape using it. If you want to trade forex by yourself, you must use this trading platform. Now, it's ideal for analysis. It's ideal for trade execution. It's all in one software that can help you trade the market. So the first thing I'll show you, I believe some of us are new, are beginner traders, because this is actually beginners class, purely beginners. So the first thing I'm going to show you this afternoon is how to place a trade. So if you're there this afternoon, you have never placed a trade as a forex trader, you've only been seeing charts up and down. This is an opportunity for you to learn how to place trade by yourself. Just a second. All right, so to place a trade, all you need to do, if you're taking a buy trade, we take a random buy trade and a random sell trade. To place a trade, just come to this section labeled new order. I just circled it up there. Click on it, and this menu will show up. And I can see it's Euro USD. That's the symbol. The volume is the same thing as the lot size, 0.1. Take profit, stop loss. Then we'll still attach those take profit and stop loss. But for now, we're just taking a random buy and a random sell. So if I'm just to take a buy trade, I'll click this buy by market button. That is the buy trade order. So I'll click it, and you can see the trade has been taken. You can see it's displayed below here. That's a buy trade, a random buy trade. I didn't add any take profit or stop loss. We'll still do that. And if it's a sell trade, I'll come back again to new order. I'll click on sell, and you can see the trade is taken. So that's how simply to take both buy and sell trade. Now, I'm not saying that you must take, if you want to trade USD, I'm not saying you must take a buy and a sell trade simultaneously. No, you only take trade in the direction of your strategy, which gives you a signal. But here, I'm just showing you how to place a trade. Now, if you're to place a trade, you need to know what is the profit target and the risk. The profit target is the take profit level. The risk is the stop loss. So let's assume this Euro USD trade now. Let's close this one. It's just for uh, educational purpose only. It's not a signal. Now let's assume that we've analyzed the Euro USD and we believe price is expected to go higher. We want to place a buy trade. And in a bullish trade, the take profit is always higher than the entry price. So this black line here is the current market price. So the take profit is meant to be higher than this. So let's assume take profit is high up there and stop loss is lower. All right. Now take note. I said in a buy trade, take profit is above the entry price. Entry price is the current market price. Take profit is above it. Stop loss is below the entry price. So in other words, we have the entry price, which is the current market price, because what we are doing it now is called an instant execution. It's not a pending order. This is purely instant execution. Take profit is above it and stop loss is below the market price. So let's take the trade properly now. I'll come here again to new order and I'll click new order. This time around, we have the parameters to insert into it. So the current market price is 1.17496. We are not going to input that here because the trade here, this order will just take us directly into the market. But then the take profit is above the entry price. Take profit here is 1.19425. So we'll come to the take profit section here, click on the black arrow, then add 19425. That's the take profit. Stop loss is the one below. Stop loss is 1.16805. So we come to the stop loss section, 1.16805. So we have inserted both the take profit and the stop loss. So the next thing we'll do is that we'll click on buy by market, which is a buy order. I'll click on it and you can see the trade is taken. Now we have our complete buy trade, a buy order. Now, when you take a trade on the MetaTrader platform, it's a very vast platform, very robust platform. You can get every information about your trade. For example, right here on the tab, we can see here the order number. Every transaction has an order number, which you can use to track every trade you take. So here we have the order number. We have the time, the specific time the trade was taken, the type of trade, it's a buy trade, the size, which is the lot size, which is also called the volume, 0.1. The symbol of the instrument we traded is Euro USD. The entry price, the price at which we executed the trade, that's 1.17512. The stop loss, 1.16805. The take profit, 1.19425. And this one here is the current market price. Now, it should be noted that the entry price will always be fixed. It's not going to change. because that is the price at which you entered into the market, while the current market price always fluctuates. You can see it's changing from 4 to 3 to 1 to 2 because that's the current market price. It's always changing based on the forces of demand and supply in the market. Then we have the commission, the swap, and others. So this is basically how to take a buy trade. Now let's take a sell trade using the same idea here. So let me clean off what I've drawn. Now, in a bullish or in a buy trade, price is expected to go higher. In a bearish or a sell trade, price is expected to drop lower. So we'll do a sell trade now. So in a sell trade, again, entry will be the current market price because we are doing an instant execution trade. Take profit will be below the market price randomly. This is not a signal. Stop loss will be above the current market price. So we come here again, click on new order. Same Euro USD, volume is 0.1. Take profit this time is the lower one because price is expected to drop lower. So this is the TP, while the one above is the stop loss. So for a sell trade, entry price is below market price. Sorry, entry price is the same as the current market price, pardon me. Take profit is below the current market price and stop loss is above the current market price. So here, the take profit will be 1.16722. Stop loss will be 1.17973. So we'll click on the sell by market, and that automatically triggers us into a sell. It's just as simple and straightforward, just like I showed you now. All right, so I've showed you how to take a trade, both a buy trade, a sell trade. Just a second. All right, I'm back. Now, I'm going to show you how to place a pending order. Don't forget, we're going to be having NFP this Friday. Non-farm payroll is a live trading session, and I don't want you to miss it. So maybe in previous sessions, you've just been by the side watching what we're doing. But this time around, I'm going to show you how to place pending order because that's what we do when we have NFP. We have live trading session where we will drop for you a pending order signal. Now, the trades I took now were called, they are all both called instant market execution because we entered into the market directly. Now, there are some other times when you use what is called a pending order. A pending order is a kind of order that you set up in such a way that at the time you are setting up that order, price has not gotten to that level yet. It's like you are automating your trade such that it is only when price gets to the required level that is when the platform automatically now triggers you into the trade. So if you are setting a pending order, it means you are not entering the market now, but you are waiting for certain conditions in the market to be met, or you want price to go to a certain level before you are triggered into the trade. Now, how do you place a pending order? You come again to new order up here. You click new order. Now, instead of instant execution now, you click on this drop-down menu under market execution. That market execution is the same as instant market execution. You click it, then you see the menu for the pending order. You click pending order. Now, there are two types of pending order. There is a limit order and there is a stop order. Now, I'm just going to be focusing on the buy stop and the sell stop alone because I'm not going to be doing a limit order for this NFP. But okay, let's see if I can still teach you today. But the focus actually is going to be buy stop and sell stop because that's what we use most for NFP. So let's see how that works. Now, how do you set a buy stop and a sell stop order? In a buy trade, when the market sentiment is bullish, meaning when we expect price to go higher. Now, for instant execution, I say that entry price is the same as the market price, just like I placed here. If I'm to do instant execution, this price will be my entry because that's where the market is at the moment. But if it's a pending order, it means I want to wait for price to climb higher. Maybe I'm looking at price getting to some 10 pips above the current market price or 20 pips above the current market price. That is the point I want to be triggered into the trade. Then I will set it as a pending order that when price gets to this particular level, that is the only time I want to be triggered into the trade. So this one now, for a pending order, the entry price will be above the current market price and take profit will be way above it. Stop loss will be below the current market price. So let me label it. So this is a pending order. Why? This is entry. Let's label it as E. Take profit is the one above TP, and SL is the stop loss. So you can see three price levels, unlike the instant execution where you just have take profit, stop loss. For the pending order, the buy stop order, entry price is above the current market price, take profit is way above it, and stop loss is below it. So let's take this trade now. It's a random trade, it's not a signal, it's strictly for educational purpose. So we come here now, click on pending order, go down to buy stop. The entry price where I labeled as E is 1.7940. Take profit is the one above the E, that is 1.8551. And stop loss is below the current market price, which is at 1.17176. All right, so I've set it all, the entry price, take profit, and the stop loss. So I click place. Now you see the trade has been placed. Is the one in ash color below. Now you can see that it's not showing like the other trades that are already white that are active. Reason is because this trade is not activated yet. It's not going to run now until price gets to the desired entry level. All right. Now let's look at the sell stop order. Let's use the USD CHF for that one. All right. Now for a sell stop pending order, we are looking at price dropping lower than the current market price. And we are looking at entry below the current market price. So for a sell stop pending order, entry price will be way below the current market price. Now this black line is the current market price. Entry price will be below it. Take profit will be way down below, and stop loss will be above the current market price. So entry is here below the market price. Take profit, TP, is way below, and stop loss is above the current market price. So we'll place this one also, come to new order, sell stop. You need to select it as sell stop. Entry is 0.77580. Take profit is 0.76736. Stop loss is 0.78186. So we'll place it, and that's it. You can see we now have both the buy stop order and the sell stop order. Now, I think I should just show you how to do the limit order, even if majorly that's what we're able to do today. You need to know how to do all this. Now, for limit orders, how do you set a buy limit, a sell limit? What is a buy limit? What is a sell limit? I said for buy stop, price for a buy stop order, entry price is above the current market price for a buy stop order. I'm trying to get something here. All right. So for a buy stop order, entry price is above market price. We anticipate price is going higher, but we want to enter at a higher price than the current market price. That is a buy stop. But for buy limit, the opposite is the case. For a buy limit, based on strategy, we believe price will first drop to a lower level before going higher. That is a buy limit. So the buy limit is opposite what the buy stop is doing. For the buy stop, entry price is above current market price. But for the buy limit, entry price is below the current market price. I'll repeat that. For a buy stop order, entry price is above the current market price. But for a buy limit order, entry price is below the current market price in such a way that we believe price will first drop low, then break out to the upside. So for a buy limit, entry price is below market price and take profit will still be above the market price. So for a buy limit, this is what I say, price drops here, it takes the entry, then it reverses to the take profit. So what about the stop loss of the buy limit? The stop loss of the buy limit will still be below the entry price. Let me rewrite this. So price drops, take profit above. This is entry. This is take profit. And this is stop loss. So for the buy limit order, entry price is below market price. Take profit is way above the current market price, while stop loss is below the entry price. Let's take an example. This is GBP USD. So we come here again. We do buy limit. Entry price is 1.35344. Take profit is above 1.37089. Stop loss is below 1.34933. You can see it placed below the other ones by limit. All right. So let's look at another instrument and do a sell limit. Okay. Now, for a sell limit order, entry price, again, for a sell stop, let me use sell stop to explain it. For a sell stop, entry price is below market price, right? But for a sell limit order, entry price will be above the market price. So here, again, we believe that price will first go up, even though we're looking for a sell, before it breaks out downwards. So for a sell limit order, entry price is above the market price. Take profit is way below the market price. And stop loss will be above the entry price. So here, this is entry. This is take profit. And this is stop loss. So we take an example of this again. Sales limit, entry price 1.86213. Stop loss, sorry, take profit rather, 1.83267. Stop loss 1.86844. All right, so we've taken the trade also. So you can see here now we have the buy stop, sell stop, buy limit, sell limit orders. All right, we've covered something huge. Now, let's look at a few other things on this MetaTrader platform before we end this session. Now, there is this segment here labeled Market Watch. If you look at the right-hand side here, Market Watch. Now, you can see with the Market Watch, there is a clock, a timer attached to it. Let's call it a clock. And currently showing that the time is 18 hours, 33 minutes. Now, 18 hours normally should be around 6 p.m., but then time is just around 4 p.m. right here in Nigeria. So that means that our summer time is 2 hours ahead of the local time. And you need to take that into consideration when you're taking your trades. Then above that level, above the market watch, you can see here another segment where you have M1, M5, M30, H4, and the rest. What does this mean? It's what is called the time frame. Now, price moves within what is called time frame. Time frame helps us to measure the movement of price over a period of time between 1 minute to 10 minutes to 20 minutes and 1 hour and above, like that. Now, of what importance is this to you as a trader? Time frame will help you know the timing that is applicable to you as an individual to trade. What I mean is this: it will help you know your trading personality and how to trade using your own personality. Now, one of the biggest challenges of traders is that people are trading based on the personality of another person, probably their mentor. But time frame will help you know the personality that suits you, your own personal outlook to life, which can be an indication of the time frame you use in trading. So with that being said, let me show you each of these time frame on the chart. Now, the first one is the M1. If I click on M1 now, the chart automatically reverts to the 1 minute time frame. All right. Now, on the 1 minute time frame, every 1 minute, a new candle, all this green and red, they are called candles. They indicate price movement as price is trending up or coming down in the market. Please take note. I always say this in my class. Red candle does not mean sell, and green candle does not mean buy. Taking a buy or sell is a function of a strategy, not just a candlestick. Please take note of that. Now, we can see here the timer on the market watch is showing 35 seconds. We're looking at this candle. By the next 1 minute, a new candle is going to appear. Now it's 42 seconds, 45 seconds, 48, 49, 50, 53, 56, 57, 58, 59, then 00. We should have a new candle right now. We're already in another minute. Good. You can see a new candle appeared. Now, what does this indicate? That in the last few minutes, price has been trending downwards. So here, with this candlestick, it means that on the 1 minute time frame, every 1 minute, a new candlestick will appear in the market, showing us what is going on. If we go to the 5 minutes, which is the M5, that indicates price movement in the next, in the last 5 minutes and currently what is happening now. For 1 hour, it means every 1 hour, we have a new candlestick which can point us into what is happening in the market. So in other words, that means that for several 1 hours in the past, the market has been going very bullish. It's been in a buy mode. All right. Now, the next time frame is the 4 hour. For this one, it means every 4 hours, you have a new candle. Now, there has been a lot of 4 hours from the beginning of this week. That means the better part of this week, this instrument has been buying because on the 4 hour time frame, that is what has been happening. Now we have the daily time frame, which shows us what happens the entire day. That's D1. Now this means that today, this instrument has been buying. This is today's candle, this green candle. All right, so let's check how many pips this instrument has moved today. This instrument has moved 118 pips today, meaning if as at early this morning you just place a random buy, by now you'll have made the 118 pips because that's what the daily time frame is showing. Then we have the weekly time frame, which tells us what happened the entire week, whether the market has been buying more than selling the entire week. We can see that on the weekly time frame. Then we have the monthly time frame, which is the biggest, which shows us the entire movement the whole month. Now, see here, there was a reversal candlestick here. This was way back in 2022. And GBP AUD has been in an uptrend since then on the monthly time frame. That means that in 2022, if you just took a random buy on GBP AUD, GBP card, as at today, you will have made about 3,300 pips on 0.1 lots. Is that not a good investment? That's about $3,000, you know, depending on your account size. If it's a bigger account, you can make more. All right. So what implication does this have on you as a trader? It helps us to know the category of traders that we are. Now, there are four categories of traders. There are scalpers, day traders, swing trader, and position trader. Scalpers use smaller time frame like 1 minute and 5 minutes. Day traders use the 1 hour time frame for entry. Swing traders use the 4 hours, and the position traders they trade on the daily time frame. So you need to know the one that works best for you because that's how you can get the best result as a forex trader. Now, to begin to round up, I'll just show us a few other things. The indicators. There are those things we call technical indicators. If you come to this menu and click on the drop down, you see the indicator segment. You have the trend indicators that shows us the market direction and the oscillators that help us to confirm a trend. Now, I'll just show us the oscillator, the stochastic. You need to know about the stochastic oscillator. Let me remove all this. All right. Okay, let's take another instrument, brand new one. Now, for the stochastic oscillator, we'll come back here, go to oscillator, click on stochastic. Default setting, click OK. Let me remove this too. All right. So this is the stochastic oscillator. It helps us to confirm if a trend is going, if the market is going in a particular direction for a long period of time. So there are two segments of the stochastics. There is the 80 and the 20. I just mark them now at the corner of the screen, the level 80 and the level 20. The level 80 is an overbought zone, meaning price has bought so much that it will no longer buy beyond that level, but rather it will reverse and start selling. While the 20 is the oversold level, meaning that price has sold so low that it will not sell below that level, but rather it will reverse into the buying direction. So let's look at it. On the screen here now, let's use the vertical line tool. We can see the stochastic. Okay, let's look at past data. Let's not use the current one. All right, you can see that the stochastics got to 80 and above 80. And what happened here? The market reversed into selling. Again, it got to 20 and below 20. The market reversed into buying. Again, it got to 80 and price reversed to selling. It got to 20 and below 20 and market reversed to buying. So stochastics can be used to know if price will be going in a particular direction for a long period. Now look at this period when the stochastic got to 20 and below, and we saw a reversal to the bullish direction. Let's calculate the number of pips. Now, besides, this is a 4-hour time frame. Price moved as high as 110 pips in that bullish direction. Again, if you check the next one, price moved as high as 125 pips. Just with the indication of the stochastics telling us the market is oversold, we can start looking for opportunity to buy. This is a technical indicator. It works. You can incorporate it into your trading strategy. I'll talk about the next one now, which is the moving, sorry, which is it's actually moving. Moving average convergence and divergence. That's MACD. But let's talk about the relative strength index first, RSI. Now for the RSI, we have level 30 and level 70. By default, 50 is not there, but you can add it. Now, for the RSI, it works in a similar way to the stochastics, but we'll use it a bit differently. For the RSI, the level 70 is the overbought, the level 30 is the oversold. But the emphasis is actually on level 50. Now, level 70 and 30 will work the same way the stochastic works. When price gets to 70, we expect a reversal to the downside, like it happened here. Price got to 70, and we can see there's a sharp drop in price. Price got close to 30 here, and that's this point where the market reversed. But like I said, what we focus on with the RSI is actually the 50. For the RSI, If RSI crosses from below 50 to above 50, it signifies a buy. You can see in this example there, it crossed from below to above 50. Again, here it crossed from below 50 to above 50, and that signifies a buy signal. Again, here it crossed from below 50 to above 50. It signifies a buy signal, and on like that. Now, for a sell signal, it means RSI is crossing from above 50 to below 50, and that can trigger us into a sell. Again, here it crossed from above 50 to below 50, and that can trigger us into a sell. Finally, we look at the MACD. Okay, I call it MACD, MACD, but the full name is Moving Average Convergence and Divergence. Default setting, just leave it as it is. Don't change anything. Now, for the MACD is not going to tell you whether the market is overbought or oversold, but it will, when it changes direction, it means the trend has completely changed. So how do we use the MACD? For the MACD, our focus is the histogram, or you can call it the bar. Anytime the histogram crosses from above, now the midpoint here is 0. If the histogram crosses from above 0 to below 0, it indicates a sell, like this example. If it crosses from below 0 to above 0, that indicates a buy. Again, if it crosses from below 0 to above 0, it indicates a buy. If it crosses from above 0 to below 0, that indicates a sell. So how do we put all this together to form possibly a trading strategy? It's very simple. I'll show you one. Before I do that, let me show you the last one, which is the trend indicator, and that is the moving average. I'll show you a simple strategy that works. Trend, moving average. Now, for the purpose of this class, I'll just use one setting of the moving average. That is the period 200. Exponential moving average applied to close. Let's use the color red. Now, for the moving average, this is how it works. Now, anytime price is above the moving average, it indicates a buy signal. When price is below the moving average, it indicates a sell signal. So like here now, when price is the candles, when it crosses above the 200 moving average, it means the market is in a bullish trend and you can take a buy trade. When the price crosses below, it indicates that the direction has changed from buying to selling. So that means that all this area where price is above the 200 moving average, we can only look for a buy trade. And when it crosses below, we can look for a sell trade. Now, it should be noted that the moving average is not a perfect indicator like every other indicator in the forex market. They are not perfect. But if you know how to combine with other indicators, you should be able to get indicators that can give you a good strategy. For example, you can see here that the moving average crossed below the red line. And if you have entered the sell here, it reverses back immediately. That will have been a losing trade. Similarly, it happened again here. It crossed below. If you enter the sell, it reverses. That will have been a losing trade. So you don't use any indicator in isolation. Don't say one indicator is what you need to give you all the signal. No, there's nothing like that in FX. You have to combine minimum of 3 indicators together to tell you the next direction of price. All right, so all these indicators are put together. How can I use it to take a simple, straightforward signal? Now, for the stochastics work best on higher time frame. So if you are looking at the stochastics on the 4-hour time frame, the best time frame you can use to make entry should be on the 1 hour. Always make your stochastics on the higher time frame because it's used to determine long-term trade in the risk side of it. So make it on the higher time frame compared to the one you are using for entry. So I'm looking at my stochastics that's oversold now on the 4-hour. I'll leave every other indicator and go down to the 1 hour time frame. Now, if you look at it on the 4-hour here, price is completely above the 200 moving average. Stochastics is oversold. Now, above 200 moving average means we're looking for a buy. Stochastic oversold meaning we're looking for a buy. RSI is about to cross. Okay, the RSI MACD, we'll look at them on 1 hour. So let's not talk about them now. So we flip down to the 1 hour time frame and we look out for when our RSI crosses above 50 and our MACD cross above 0. Now you can see that the RSI clearly crossed above 50 here. Now MACD crossed a little bit later. Now the MACD is one of the best indicators in the forex market, but it has a little issue. It can lag a lot more than other indicators. But the truth is that it's still the best indicator that can help you know if there's already a market reversal. So that is a positive side to it. So RSI will trigger you faster into trade compared to MACD, but it's always better to wait for the MACD because once the MACD crosses, it means price direction has completely changed. Now, this is the area where we saw our stochastics oversold on the 4-hour and price above the moving average. But then we need a confirmation of the RSI above 50 and MACD above 0, and that happened here. So at this point, we have fulfilled all the conditions. Moving average, price is above the moving average, the 200 moving average. Stochastics is oversold on 4-hour. RSI is above 50 on 1 hour. MACD is above 0 on 1 hour. So if you took a buy trade here, just in line with all this gave as much as 82 pips. Simple, plain, and straightforward. All right, that'll be the end of this class this afternoon. If you have a question or questions, the floor is open. Don't forget on Friday, we're having our NFP live trading session by 1 p.m. Make sure you attend. So the floor is open. Let's take questions as we begin to round up. Question, question, question. All right. In the absence of any question, just watch out in your group. The recorded version of this training will be uploaded. Make sure you watch it and practice the things that were taught so that you can become proficient at it. All right. We'll see you again some other time. Take care and it's bye.